Now, crop insurance can improve food security in Africa, as packaged with a range of other policy measures. Of course, Africa's food security does depend on reliable, steady harvests from a lot of smallholder farmers who produce the bulk of food consumed on the continent. But erratic weather is making their job increasingly difficult. This year, droughts cut into harvests across Malawi, Rwanda, Tanzania, Zambia, and many thousands of hardworking farmers struggled to make ends meet. And one proven tool to increase farmer resilience is crop insurance, which does help farmers weather poor harvests and adapt to an ever-changing climate condition. So then let's delve a little deeper into the growth of these insurtech firms in Africa's agricultural sector with Simon Schwall, who's a founder of OKO. He joins us live in Tel Aviv. Simon, thank you for your time this evening. So the case for crop insurance in Africa is relatively clear, given the increasing severity of adverse weather events. But the value of premiums on the continent is less than 1% of the global total. Why is there such a small uptake for crop insurance?
Hi, Rahman. Thank you for having me. So you're right. This is surprising, especially as more than 60% of the population, I think, in sub-Saharan Africa is made of smallholder farmers. So the market is potentially huge. But from my experience, I would say that agricultural insurance is not as old as other insurance products and as easy to deploy. In Western economies, it was developed when states were organizing a modern agriculture sector and had the ability to use statistical data. Farmers were already educated and equipped with some financial instruments, and infrastructures were available, such as roads, truck scales to measure the yield, etc. So in the context of rural sub-Saharan Africa, most of this is still missing. Agriculture is still very much an informal sector. Most farms are small and difficult to reach, and farmers don't have bank accounts. So insurers, if you put yourself in the shoes, they don't have also records of the previous seasons to understand the risk exposure. So most of them focus on urban populations and on mandatory products such as car insurance, which are much easier to sell. This is not unique to Africa, by the way. Many countries in Asia and in the Pacific also don't offer crop insurance.
Is it also perhaps a demand side problem? Because, I mean, part of the problem we often hear in the insurance space is that the price of paying for insurance is often makes it out of reach for a lot of people. And if you're talking about crop insurance, might that also be part of the issue here? That farmers who look at the premiums and often say, no, that's too expensive, I can't afford it.
So that's something that I hear quite often, but actually you can design products that are cheaper. You can design products that only cover specific risks or catastrophic situations. So there are solutions to create products that are cheap and would still be useful. And that's part of what we do. But the price is a definitive factor. But the price of risk is not a problem. It's the price of the end user price when it comprises of all the fixed cost of distributing insurance. As an insurance company, I need to send someone to the field if I use traditional insurance. Send someone to the field to monitor, to verify what are the losses, to measure the field in the first place. So all these costs are what inflates the cost of insurance to a level that is not affordable to the farmers.
Okay, but there's a lot of interesting tech that's available at a relatively low, relatively speaking, cost these days. You can use satellite tech to assess crop yields, assess if you've got damage after a catastrophic weather event. And satellite data is pretty granular, but is it cost effective, though, in trying to assess risk and determine the end price at which premiums are sold to farmers?
Yes, and that's the silver lining in this story, is that this availability of technologies is making a big difference in the availability of crop insurance and the profitability of these products. So there is more and more available satellite data that is free to use, that is in the public domain, and that can be tapped on to calculate the risks. So for example, we use 35 years of publicly available historical data, satellite data, to understand in every location what is the frequency and the intensity of weather events such as droughts and floods. And with this, we can design products that are very much tailored to the location and that didn't cost us much to develop. And then there's also mobile payments. So with mobile payments, it's not possible for anyone from the field to pay for insurance It's possible for them to receive the claims on their phone without having to move to the city. And for the insurance companies, it also makes the costs much lower, because then suddenly you don't need to have hundreds of branches around the country. You just need to be connected to this mobile payment infrastructure.
Okay, so you've closed the seed investment round. You raised $1.2 million, and you want to use this to strengthen your presence across the continent. What specific countries are you looking to move into, and why are those countries attractive?
Yeah, so we are already active in Mali, and we plan to expand to Uganda, where we already conducted some pilots. We are going to move from this pilot phase to a commercial phase, hopefully by the end of the year. It's an interesting market because we already have business partners in the coffee and in the barley value chain, but also because their insurance is subsidized by the state, which allows for much better value for money for farmers. We're also looking at Ivory Coast, which is a fast-growing economy with a strong agricultural sector. And we work in Mali with Allianz and Orange, and both of them already have presence in Ivory Coast. So that's also making it a good opportunity for us. But I have to say, we receive requests from many countries around Africa to bring our solution. So we know there is demand in many markets. We have to restrict ourselves because our funding is not unlimited at the moment. But if we find public or private partners who are willing to share the cost of launching OKO in their markets, we are happy to do that.
Let me try and understand the routes to market, because most of the time crop insurance tends to be taken up by large commercial operations. In Kenya, for example, you talk about crop insurance. East African breweries will offer it to their sorghum farmers, for example, because they need to have that security of supply. Is that usually the first step of getting crop insurance into a market, when you've got large commercial farmers taking it up, and then that perhaps filters through to small-scale commercial, to smaller smallholder farmers?
It helps, and we worked on a pilot with Nile Brewery in Uganda, but in that case, the farmers are still smallholder farmers. So what helps is that there is an entity in the middle that helps us connect to the farmers, give credibility, give reassurance that this is a good service. So the having a structured value chain is definitely helping, but it doesn't need to be commercial farmers. And to give you another example, in Mali, we didn't have we didn't have such partner, and yet going directly to the smallholder farmers, connecting with them really on a one-to-one basis also worked. We now have more than 8,500 farmers insured with us in Mali.
Okay.
So it helps, but it's not a necessity.
Okay, one last question for you, because looking at the relative newness of the product, the need to build trust, the need to build confidence, can this product work without government subsidies being involved? Being essentially, because if you're trying to build it up across a large scale, if you're looking at Kenya, Uganda, for example, where you pointed out the bulk of GDP is basically in agriculture, the bulk of employment is in agriculture. But can products like this scale if there are no government subsidies involved?
So we've been able to prove in Mali that this can work without subsidies. In Mali, insurance is not subsidized. And even worse, it's actually taxed more than other goods. So this demonstrates that farmers understand how much insurance can help them, and there is a real demand for these crop insurance products. Yet countries where subsidies are available are more attractive to us because they allow us to give a better value for money offering. So we take this into account. But also, subsidies are not the only way a government can help in the adoption of insurance. They can reduce or lift the taxes on insurance products. They can conduct education campaigns. They can publicly endorse some insurance solutions. So in Mali, for example, we are campaigning for a reduction of taxes on insurance, which are penalizing farmers who make the effort to secure their income. So subsidies help. It's a big push to help farmers, convince farmers to get insurance, but it can be quite difficult to put in place. So other initiatives can also help, such as those that I listed here.
All right, we'll leave it there for the time being. Simon Schwall, founder of OKO. Thank you very much for your time this evening.